It's 3 a.m. A high-probability liquidity sweep hits the Euro USD, matching your strategy perfectly. But you miss it because you are asleep. Or maybe you are awake, but you're exhausted. The market spikes, panic sets in, and you miscalculate your lot size, turning a standard 1% risk into a massive, unintended gamble. The market doesn't blow up accounts. A stressed, fatigued human brain does. Automating the execution process addresses the physical limits of manual trading, the inconsistency, the emotional bias, and the inherent latency of human reaction. This requires a specific piece of architecture, MT5 Expert Advisors. By hard-coding your rules into an EA, you offload the relentless mechanical execution to a machine. You still define the strategy. The code simply executes it with institutional-grade precision, letting you scale your edge instead of testing your endurance. Building this kind of system requires the right foundation. Older platforms like MetaTrader 4 rely on procedural code, reading commands like a simple, rigid recipe. That structure struggles to manage modern, multivariable strategies. This illustrates MQL5's object-oriented architecture, letting you build algorithms like modular Lego blocks. If you program a flawless risk management protocol, you can reuse that exact same block across different systems, drastically reducing coding time. MT5 is also multi-threaded. Legacy systems often bottleneck because they process one task at a time. MT5 executes complex mathematical calculations concurrently. Because of this, a single piece of code can simultaneously monitor the USD JPY, GBP USD, and AUD USD, and instantly execute trades based on their correlated movements. This modular architecture shifts the trader's role from reactive clicking to high-level systems management across a multi-asset portfolio. But even the most sophisticated logic is useless if you build it on flawed historical data. Standard backtesting often relies on interpolated data. The system basically guesses the price action between open and close, creating an artificially smooth chart that hides the actual volatility of live markets. MT5 solves this with a testing environment called Every Tick based on real ticks. Take a look at these two datasets. The smooth line survives a trade, but the jagged line, representing actual historical spread widening and liquidity gaps, shows how a tight 5-pip scalp would have actually been stopped out. Testing multivariable strategies against years of this high-fidelity data demands immense computing power, which usually chokes standard local hardware. To bypass this, traders use the MQL5 cloud network. It's a decentralized network that lets you instantly rent the idle processing power of thousands of computers worldwide. What used to take a laptop 100 hours of agonizing rendering to optimize now takes about 10 minutes. Running massive, high-speed optimizations on real tick data removes the illusion of perfection. It builds genuine, data-driven confidence before you risk a single live dollar. Out in the live market, your strategy is only as strong as your discipline. The urge to revenge trade after a string of losses will clear an account faster than any market crash. Expert advisors allow you to mathematically neutralize that temptation. You can program a maximum daily drawdown limit directly into the core code of the system. This visual shows the safety net in action. If your daily equity drops by exactly 3%, the EA instantly liquidates all open positions and terminates the trading session. You literally cannot place another trade. Next is position sizing. A fixed lot size is dangerous because the distance to your stop loss constantly fluctuates. Watch how dynamic position sizing balances risk. It calculates your equity and stop-loss distance, automatically scaling your lot size so you only risk exactly 1%. Hard-coding these protocols transforms risk management from a subjective choice into a structural requirement that preserves capital automatically. Before a system goes live, it has to pass a final reality check to avoid the curve-fitting trap. This is the amateur mistake of tweaking parameters until a backtest shows an unrealistic 99% win rate on test data, which collapses in live markets. This diagram illustrates the solution. You optimize the EA on one chunk of historical data and then perform out-of-sample testing on a completely separate time period. If the strategy stays profitable on data it has never seen before, your edge is real. Once validated, execution relies on infrastructure. Running an automated system on a home Wi-Fi network exposes you to latency and slippage. A virtual private server, hosted right next to your broker's servers, provides the 24/7 stability and single-digit millisecond execution required. You also don't have to surrender total control. In fact, many traders choose to adopt a semi-automated hybrid approach. You conduct the high-level macro analysis and manually trigger the entry. The moment you click Buy, the EA takes over, autonomously managing the dynamic trailing stops and scaling out of the position exactly as programmed. This is the philosophy of the minimalist scaler. The trader focuses on the performance of the underlying mathematical system rather than the movement of individual price candles. Audit your trading journal today. Find one repetitive task, calculating lot sizes or moving stops, and build a utility EA to handle it. Then open an FXNX MT5 account to execute your